12/5/2012. One of the things that we would like to point out, once again, Apple Computer down $37.05 intraday. When we were at the first extremely oversold level, you can clearly see here where we had rallied up. We didn't quite hit the 200-day simple moving average right below the 600 because, as I had said, you would get right up to the level. One of the things we talked about was that divergence. And why would you come back down here to this low of 505? This particular trend line that I'm about to show is where the tops were put in. We got below the 10 and the 20. And Apple Computer right now, even amongst all the greatest news and all of their sales that people are talking about, is it's just not going to be there, and that a lot of this could be tax selling. I would say that every hedge fund manager has it in their holdings. This is going to be the key area of support that's going to come up tomorrow. It's going to be 522. Right here is where we had gapped up on the daily and we were extremely oversold, but then this name right here has that daily sell signal. Not only that, one of the things that I will point out, that any up movement in any upside volatility, as we said when it was oversold, to sell short. One of the things I want to point out to the weekly chart, one thing that we have not seen in Apple Computer on a weekly chart, and that's what we call a moving average convergence divergence weekly sell signal. Now, I will go back over here a number of weeks. Back over here in 2009, we had a little weekly sell signal. But for the major part of 2009, all of 2010, all of 2011, all of 2012, you have never, in those calendar years, had a weekly sell signal on Apple until today. That means that once a weekly sell signal starts, there's a lot more downside. And not only that, the lows of the last lows that were put in right here on this weekly are at jeopardy, because they are. One of the things that I would like to point out, this is the first sell as of today, meaning that when we had the big short that we called up here at 705 down to 505, we were never, all we were doing was working the weekly overbought process off, but never did, even here, we never went into that weekly sell signal at 505. Now we have a weekly sell signal at a much higher price level. Another thing, they call it a death cross that's in play. And once again, the 10-week keeps going down in value. Yeah, you had the 10 days up, and that it did it during Thanksgiving. But here's the thing. People that own Apple at this point, look, it's going to be a short. So listen, the thing about it is there's been new margin requirements on Apple Computer. So the margin requirement with some of the bigger firms was 30%. They've raised that margin requirement to 60%. Part of today's selling in Apple, part of the selling in Apple's 1,230 intraday lows. They sold it right down in the last couple of minutes. They just dropped the bomb. Down $37.05 from the close, $30.44 from the intraday high to the low. Right here, the numbers. What we will tell people is that part of the margin debt, or the margin requirement that goes higher, is a part of it. The other part is tax selling. Everybody owns it. It's the most owned stock in America. And when these bouts start in this selling, they all run for the exit. And a lot of them are capping in their gains now. So the people that didn't sell started to sell again because it appeared that Apple wanted to go a lot higher. And you had nothing but positive comments out of the analyst community. You had upgrades again. You have they're rolling out products in 100 different countries. However, Google is starting to take market share with Android. And moving forward, the competition, as we've always said, that this is to be a 2013 story, not so much the end of December. However, once that selling started, this was the amount of weeks. Now you got the weekly sell signal. That means we go lower. Any up move, we buy put options. The put options over here on the 555 put, they were $1.80 today, and they expire Friday. They had a big move, $16 in these put options right here. That means that we will be buying intraday when we rally up because of the weekly sell signal. We have very safe trades that can be bought, and we will look at various other strike prices on the put side of Apple. And we've even gone out here to February, and we've looked at very carefully this one particular put option that we were buying below the market is this one right here. It's a $480 put. Now, they're up $7 today. They had closed at $7.20. The reason why they cost more money is because of the time premium going out to 2013 and a February one. That's one area we're looking at. Another area that we're looking at in this name is January effect. And what strike prices are we looking at? We're going to go right over here. Once again, even in the January 510 put, it's up 8.75. When Apple will rally up to resistance and these price levels can come down, these will go higher. And they will. So, based on the fact that Apple has that weekly sell signal, it takes a lot of risk out of the trade on the intraday shorts, because once weekly sell signals start, they just don't stop. 538.79, they continue to sell it down. We'll be doing a lot of trading with the MMTs once again. It's a broken stock.